Hello, everybody. It's Larry Kotlikoff back with Economics Matters, the podcast. I'm here with my great friend Fred Lane, and Fred is somebody who's appeared already on the podcast. Fred is one of my go-to people on how the economy is doing, and also. I like to get his take on geopolitics and basically everything there is. He's a brilliant guy. Fred is I'm going to have Fred fill in all his bio because I don't want to just sit here and read his long bio, and he's going to emphasize some key things. But right now he's running Lane Generational, which is an investment fund that's situated with Fidelity Investments, if I've got that right. And he's got a BA, I think you said in English, from Harvard, and then he was on the rowing team, and he ascribes his immediate acceptance to Harvard Business School based on partly on his ability to be a great rower, because they respect the tenacity of rowers over at HBS. Fred's had over 40 years of investment corporate finance experience as a portfolio manager, private equity investor, investment banker. He was involved in, I believe, the founding of Staples. And Fred, you have a long list of things here. You also were managing director and principal of Donaldson, Lufkin, and Genred Securities. Why don't you fill in how you went from maybe a 10-pounder at a few years back to this terrific career, and then we'll start talking about the economy. So great to have you back, Fred.
Thank you, Larry. Well, I think a lot of my
let me just ask you to pull down your screen just a tad, because you're a little bit the other way.
Other way.
Yeah, there you go. That's perfect.
Yeah. You tell me when it's not right. Yeah.
That's great.
So I think a lot of my so-called success, which I guess we can measure in economic terms, but I'd rather measure it in life experience terms, was really a function of what happened in the world post World War II. I was born in 1949. My wife hates it when I suggest to people what age I might be. But I was born in 1949 as part of the baby boomers. And so when I came out of college and business school in the early 70s, mid 70s, I was part of that baby boomer group who were coming into the job market. Larry, I think you're probably part of that same cohort. And that created tremendous economic tailwinds for the U.S. economy. In addition, the federal government started to mandate savings because the legislators thought that we baby boomers, remember, we had been hippies and we'd been Vietnam protesters in many cases. And I think they considered us to be irresponsible and unlikely to save a nickel. So they forced us to save through individual retirement accounts. I'm sure you remember that. And then they liberalized rules around 401ks. So there was this forced savings going into the environment. And all the academic studies said, if you're going to invest for the long term, 10, 20, 30 years out, you must invest in equities. So when you take those things together, they created a tailwind for the equity markets, starting in the late 70s into the 80s. Now, by the way, I should add that returns on an inflation-adjusted basis during that period weren't very good, actually. The returns were much better in the commodities side of the world, the hard asset side of the world. But that notwithstanding, there was this flow into the equity markets, which became a flow into the high yield bond markets, the private equity markets, the venture capital markets, all of which are variants on equities, right? They're basically equities. So we enjoyed this tremendous wealth building phase. And then Ronald Reagan, love him or hate him, he did some good things, he did some not such great things, but he did cut the marginal tax rate on earned income from 70% to 50% in 1981, and then he cut it from 50% to 28% in 1986. And I think when you take those factors all together, it really created wealth creation that was, I think we're still benefiting from it and maybe dealing with the ramifications of it today. This is the whole wealth transfer intergenerational phenomenon we talk about, where there are just a lot of people who have worked in various sectors of the economy, primarily heavily finance oriented, where you could basically build wealth as an employee. I mean, you didn't have to be a star. You didn't have to be an entrepreneur. You really could be kind of an average guy who worked pretty hard and had some intelligence, and you could do extraordinarily well. It's really, in my view, it's kind of right place, right time, right circumstances. So,
let me just interject that, for the baby boomers as a whole, I think that they basically failed to save enough for retirement. I mean, I think that for a good segment, they've done really well, and this goes along with reported increases in wealth inequality. But for the baby boomers as a whole, this whole 401k experiment, where the employer is supposed to be your father or your mother and your parents, and he's going to contribute to this account, you're going to contribute, and then he's going to decide, or your employer is going to decide how you can invest, what you can invest in, how much you can invest on a tax-free basis. The employer becomes the government, in effect, by determining your taxes. I think that's been an unmitigated disaster for the country, personally.
Listen, Larry, I agree with you. I mean, I think the problem, and I think a lot of people, I have a few clients who are in the position of relying on 401ks and what they forget for their retirement income. And what they forget is when they take a distribution, it's taxed as ordinary income. So I tell them, if you've got 5 million in 401k balances, which is a lot, if you have that much, okay, recognize that you have to put a tax impact on that. So let's just say 25%. Well, or even 20%. Well, then 5 million becomes 4 million, or it becomes 3 million. So
there's tax illusion. People aren't necessarily able to realize that they actually have a whole lot less than they think.
Correct.
Exactly. Flip your screen just a little bit more. I want to see a little more of you. No, the other way.
Other way. Okay.
That's better. That's perfect. That's great. A little bit cut off. So let's talk about your bio. People can look up Fred Lane, investor, and see all the details. And we went through your bio in some detail in the last podcast, and I'll link to it in this one, in the write-up. But it's extraordinary. You have a CPA that you got after, and then you got into investing into Wall Street and investing on your own and then running your own fund. But what we want to talk about today is not so much your ascent to where you are now. You've been extremely successful and you're running a lot of money, but we want to really kind of catch up on the economy and where you see things are, for the economy. How's it doing? What's going on with inflation? What's going on with banking? What's going on with economic growth, employment? What's going on with our international trade relations? What's going on because I know you keep up on all this stuff. What's going on, in your view, with our political situation, in the sense of who do you think is going to take the election, and then the geopolitics.
Right.
We've got two major wars going on in the world. We've got another one potentially in the making with respect to China and Taiwan. Take it away, Fred.
Well, I think we're frankly very, very cautious, if not and defensive, in terms of our positioning with holdings in our portfolio.
Maybe you want to just say something quickly about Lane Generational.
So Lane Generational is a registered investment advisor. We run separately managed accounts for high net worth individuals. The minimum size account is $500,000, so it's not exactly a tremendous reach. But what we seek, most of our clients have substantially more with us than that. But the point I'm making here is that we are not a growth fund. We're not a value fund. We're basically an opportunities fund. So we want to put money to work where we think the greatest value is with the least downside and the most upside. So what does that all mean? Well, it means today that we're, for example, we're 30% plus commodities related. We own gold, we own silver, we own uranium, we own miners, gold miners, we own physical uranium, we own silver miners, we own oil and gas companies. We think that the energy policies in this country are unsustainable. We can get into that topic later, but so our fund is allocated at present heavily to commodities, and we think until inflation is under control, and we don't foresee that happening anytime soon, we think that commodities are going to be a good place to be. We've also underinvested in producing additional supplies of these commodities, so that's part of the driver. And then we still are committed to growth investing. So we very much want to focus on innovation and disruption, as we always have. But the compelling nature of the commodity cycle and the geopolitical backdrop, frankly, for commodities, basically compelled us about a year and a half ago to allocate more and more to the commodity side. And that's been
two questions on that score. One is not so much about commodities, but first of all, inflation index bonds, 30-year tips. Last I looked, and I bought some last week. My wife and I, they were yielding 2.4%. We haven't seen that for probably about 20 years, that high a yield. And the tips haven't been around. Treasury inflation protected. These are Treasury bonds that are inflation protected. For anybody, they're not protected against the government taxing the inflation component of the return on your bond, which is true for regular bonds as well. But they are safe against inflation in the sense that inflation goes up 10%, your payment is going to go up 10%, and the principal amount that you'll get back at the very end of 30 years would go up 10%. And the term structure is pretty flat, so you could buy 10-year tips and also around 2.3, 2.4% real. Is that something you folks are investing in, or what do you?
It's funny you mentioned that. So our basic portfolio strategy, it's about 85% of what we manage, is in what we call our opportunities, Helix opportunities. We also have something called Phoenix, which is expressly focused on being a cash equivalent portfolio. When I say cash equivalent, and not literally cash equivalent, but basically much more of a short-term, intermediate term holding where people can draw cash out of that part of it. The volatility in opportunities hasn't been, but could be fairly extreme. We don't want people needing to access that particular portfolio for cash needs. So we have Phoenix. In Phoenix, we do have we do own tips. We do have the inflation protected tax federal Treasury securities, and we think they're helpful. We think our compounded returns will be better in opportunities, but quite honestly, in the first quarter, the Phoenix portfolio did as well as the opportunities portfolio, a little bit better.
Yeah. I would say, yeah. I mean, I guess my view on tips as a short-term investment, they seem to be pretty cheap, very, very cheap compared to where they've been for a long time. So that the only thing. Let me ask you just about AI. I mean, this is such a hot thing. Nobody knows exactly what AI is. It seems when I talk to people, they all say it's the hottest thing since sliced bread. Even people in the world of personal finance. And I've been talked about my company's financial planning software with just recently with one of the biggest companies, financial advisory companies in the country, in the world. And we had a long meeting. I was showing them our software, saying all these fantastic things it can do. And 15 people there, everybody was completely mum. At the end of it, this 33-year-old kid with an MBA who knew nothing about technology says, we just signed a deal with, I don't know whether it was Microsoft or one of these companies. We have an exclusive on AI and we're going to be going in that direction. To me, that meant the guy didn't know what he was talking about. But AI, we know, can do incredible things. I don't think in the personal finance, in telling you whether or not to take a Roth conversion this year versus not, and by how much, I think it's hopeless. But for other kinds of questions, issues, I think it's perfect. So it depends on the application. But we know there's these companies that are doing quite enormously well, from what I gather. Is that something that you've invested in or thinking about investing in, or what's your sense?
Yeah, I mean, one of our holdings is Palantir, which is basically very heavily involved in AI-driven database type applications. They also just won a major defense contract as a prime contractor for Titan missiles. Pretty amazing. For this software company to be a prime contractor for physical missiles. It's pretty amazing. But look, I mean, the truth is that AI in one form or another has been around for 20 years. What's different here is that we're trying to use a lot of databases to feed and from which to infer conclusions. So and what's interesting about it is, I mean, there are all sorts of fears out there, right? I mean, the biggest fear of all is, you and I could be doing this podcast. Someone could get access to the file, and through AI, they could frankly completely distort this conversation. They could say, Fred Lane, Fred, what's your opinion on X? And I give some outlandish opinion.
They could have me saying words that I'm not actually saying, and they could have you saying words that you're not actually saying.
And it would sound just like you, just like me. And we would only become aware of it when and as someone pointed out to us, or as we reviewed the filing. So the whole issue, that's one issue. And the other issue is, once I put my information in the public domain, maybe I'm a New York Times writer, or maybe I'm a Wall Street Journal editor, it doesn't matter. Once that's in the public domain, how is that used by these large language models? What inferences are being drawn? Is attribution being given, and is payment being made for that proprietary information? So I think there are a lot of problems with AI. I mean, I think we'll work our way through them. Unfortunately, I think it's going to be necessary. There's going to be a lot of regulation about AI, I think, unfortunately, there needs to be. So I think our view is that it's a little bit of a tempest in a teapot, in the sense that it's not going to positively affect earnings for most companies. It's going to negatively impact earnings, as they have to buy more hardware, they have to buy more cloud capacity, they have to do the investment in the applications. So I think the payoff will come, but it will come out a year or two or 3 or 4 or 5 years from now. There will be it's going to be a drag on certain companies. We know that. So
do you think this could be like a .com situation where people are given the conversations I've had with people who know nothing about neural networks, or or the actual mathematics underlying, at least what I know is the use of AI in economics, in economic research. They're just saying this thing is going to be able to do everything, when it can't. It can't do it with any kind of precision or confidence. The other thing is, like, in personal finance, if you ask ChatGPT, is AI being used for personal financial advice, it'll give you an answer saying yes, it is. It'll name some firms. It'll say it's being used for portfolio advice and basically all kinds of advice, it seems. And then you wonder, given that we know that these mathematical structures, these prediction models have structures that are have lots of layers of complexity, and that going back and saying, why why did you, the financial planner, recommend this particular stock for me or this set of stocks when they did miserably? And the planner won't be able to go back and figure out from their uh, program what exactly it was that led the program to recommend that. That could be either, ex ante a good recommendation, or ex ante a hallucination where the thing is predicting beyond the database, basically what they've been trained on, what it's been trained on. So that seems to represent a fair amount of liability. I would think that if you can't explain why you gave this advice to a client, um, and that's very different from what you're talking about, which is using your economic uh, common sense. Sekel is the Yiddish word here. And I know you said to me earlier before we started that you're about as Jewish as a goy could be. And
And
so,
proud of it. I'm
so I
proud of
can
it.
use some Yiddish here and there. Sekel is a Yiddish word for common sense. And it seems to me that, there's always going to be a need for that. Especially, the world's changing all the time, and therefore the data that anything's been trained on was trained yesterday on old data, by
Right.
definition. And then the last thing I want to say is that, or my kind of hobby horse here, is that if you train a neural network uh, to get on the wrong, I mean, you can train it to give it the right answer if you know what the right answer is. But
Right.
if you, if you're using the wrong answer to train the network, it's going to be trained to do the wrong thing, give you the wrong advice. And this big financial company, I was internally thinking when being told by this 33-year-old who knows nothing uh, about it, how this thing actually works, that this is the greatest, and I realized that their methodology for financial advice is so far afield from economics that they're going to be training their systems on giving people the wrong advice. And then, then they're going to make a big deal of it. Hey, we've got
Larry,
AI.
one of the things that I think you bring to the table, and I know your best-selling book, Money Wise, am I right? Is it
Money Magic. It's not best-selling, but it's a good book to buy.
It is a fantastic book, and I tell everybody, and I've read it. And what's interesting is, given my illustrious background, et cetera, there's a lot of common sense in that book. But common sense is called common because it is so rare. And I might add one other thing, and like the mathematicians say, this problem, when solved, will be simple. Well, that's the issue. So a lot of times, I think people in the investment business, because it's a business, right? I don't consider it. I kind of consider what I'm doing a business. I kind of really consider it a mentoring or a calling or a mission to help people. I know that sounds a little bit airy fairy, but it's true. It's how I feel about what I do. And if I can do it really successfully and build a very large asset base, great, then I'll make more money. But that's fundamentally not what it's about. And I think part of the problem is people in the investment business equate money management or financial planning. They basically want to bring it to the investment business, the investment side. Well, that's not the game, not really. The first and fundamental thing we have to do is to get people to save and live within their means and to make sensible long-term decisions. My son was a pro hockey player, and he had some interactions with a guy who was a big NHL star, and he was bragging to my son about having bought a Ferrari. And my son is well trained, and he turned to the guy and he said, "What did you pay for that car?" And this guy said, I won't name who it was. He's retired now. He paid $250,000 for the car. And my son said, about 20 or 30 years, that could be $1.5 million, but that Ferrari won't be worth $1.5 million. I mean, it turns out a Ferrari holds its value better than most cars, but nonetheless, depending on the Ferrari, my son was definitely right, because he basically in his head was taking $250,000 of after-tax income and putting a compounding multiplier on it. If it doubles every 8
Right.
years at 9%, well, you can do the math. So the point I'm making here is that that kind of financial planning is critical to people. It is critical that people understand that if I have money in an IRA, it's not equivalent to what you have in a taxable account. So you really need as an individual to balance your IRA savings with a substantial taxable account. But we don't teach people that, and it's not necessarily it is in Wall Street's best interest or these investment firms' interest to train people to do that. But it's a nuanced process, I think. And until people start to understand about living within their means, they don't do that.
So let's turn to the economy. How do you see things on inflation, on employment, and so forth, the growth?
Well, a couple of things. Everyone wants to start with inflation, although I guess Powell last week kind of passed the baton to, well, it's no longer a question of inflation. We think we have that under pretty good control now. So now we have to worry. This was in the face of a somewhat weak jobs report. We have to worry about economic growth. Well, I mean, the economy is not growing at a very strong rate. In real terms, it's growing at less than 2%. And yet we have inflation maybe running as low as the low threes. I think it's higher, quite honestly.
So the last monthly report, so we're now in May, and for the April report, I guess which was about March, because the May report hasn't come out yet. We'll in a couple of days, but the April report, which was about inflation in March, it was running on a yearly basis prospectively at 4.9%. So we're running a 5% inflation. If you take that month's inflation rate and project it forward for 12 months, if you go retrospectively, it's 3.5%. So 4.9 versus, so for how you can say that we've got inflation under control when the latest monthly data we have says it's running almost at 5% and their target is 2%. A little hard to square that.
But let's pile on to that fiscal policies in this country, which are, continue to be, I mean, we're spending hundreds of billions of dollars in foreign aid, some of which many of us will be very happy about. And as a moral issue and as a feel-good issue, I think it feels right to do that on the one hand. On the other hand, $100 billion is real money. We're not going to get that back anytime soon. Now, there are arguments, and they're valid ones, that some of that actually goes in the U.S. economy because the aid is in the form of munitions or something like that. Okay, I get that. But by the same token, we have increases, as we know. We're now spending more and more on the federal debt. The interest on the federal debt is doubling, and we're seeing a shortage, by the way, of demand for long-term bonds. So the bias is very much towards short-term bills and notes. And as a result of that, this problem with interest rates is going to continue to be confronting us sooner rather than later. If we could push out the term of the debt, that would be one thing. But the demand is low, and I think we've also alienated a lot of the critical buyers of our federal debt. I mean, China, we're treating China like it's the worst enemy in the world. We're not at war with them. We're at economic war, I suppose. And I think that started, Trump started sanctions, right? And Biden's piled on and continued them. And I think realistically that China is the largest trading partner, the most important trading partner in the world.
Do you think there was any value from, I mean, it's one thing to say we're going to clamp down on stealing intellectual property, but putting on tariffs on steel, maybe I don't know, just antagonizing China, and then they retaliate on soybeans, and now we still have these tariffs because Biden, now you're kind of stuck in the situation where people that have benefited from these tariffs, which is not the entire economy, just a segment, they have political clout and they want to keep the status quo the way it is. So do you think, I mean, we benefited at all except for Trump being able to, say
No,
nasty things about China. And I mean,
no, I don't. I think
yeah,
we've created this. We've demonized China, and this was what you and I were talking about this earlier. We as Americans tend to see the world very much from our own perspective, understandably so. And we consider ourselves to be virtuous, and we're not as virtuous as we say we are, but we try, I think. And I think to say that the rest of the world is going to behave and have our values and have our standards is unrealistic. And I think if we're basically saying, hey, you don't want to play ball exactly by our rules, we're going to take the ball and go home. Well,
I don't know what Trump's rule. I don't even know whether Trump knows what his rules were, to tell you the truth, back then. But the other thing is only 8.5% of our workforce is in manufacturing. So
right.
both he and Biden are claiming that our tariff policy with China and the imports from China are relatively small, actually, as a share of our GDP, and so are the
Yes.
exports to China. So if you look at the reality, it's not possible that these tariffs can really materially, even if we stop trade entirely with China, they would send, they produce the stuff in, or somebody else, maybe in Mexico or Vietnam would produce the things we're now importing from China, maybe with Chinese investment. So this whole idea that we're going to somehow go back to post-World War II, where maybe 40% of the workforce was in manufacturing, maybe 35. It's never been it hasn't been, I think, more than 50% for a couple hundred years, or maybe 100. Well, for not a couple hundred, but maybe at least 100 years. I don't think it's been above 50%. So anyway, you see inflation as kind of up in the air, like I do, I
And
guess.
and by the way, on the point you just made, reshoring, bringing manufacturing back to the United States, if we're truly doing that, or even if we move it to Mexico, is probably going to be inflationary. Certainly, if we do it here, it's inflationary. I mean, Taiwan Semiconductor is having problems finding qualified employees to work in their wafer fab facilities. That's a problem. Okay.
Here in the U.S., that they've set up here in the U.S. that
Here
are
in
in
the US,
existence, right?
yes. And so I think realistically, I think you're an economist. You understand the fact that countries should do what they do well, and they should trade with others who do what they need to have done better than they can do it themselves. That's basically fundamental to trade. And I learned that at a course recently. And and you know what I'm joking about. In any event, but I think it's really important that people keep that in mind. And yet the politicians, that doesn't necessarily sell in Pennsylvania or Ohio, because those voters who have friends who work at the local factory and it's being closed down, et cetera, et cetera,
Right.
they're sympathetic to that, but they're really
Okay.
being told a lie, quite honestly. And so we're a service economy, and there are some other things we do well. We think outside the box. We think creatively. We're great in entertainment and media because we just think that way. And so we're great at exporting entertainment and media to the rest of the world. Good for us.
Mhm.
And
And technology, new
and
technology.
technology. And I think protecting our technology from an intellectual property viewpoint is critically important. I think it's probably a loser's game. I don't think we're ever going to fully succeed in that, but
Mhm.
I think we need to continue to try to do so. We have 250 people in Washington who are committed to tracking exports and tracking export restrictions, but there's a lot of diversion that goes on, right? So we sell semiconductors to Vietnam, or we send them to the Philippines, Indonesia, and are they being diverted to China? And how do we control that? How do we penalize that?
Yeah, I just read something yesterday that the North Korean missiles that the Russians are now shooting at Ukraine are being made with a ton of U.S. parts. They just take like washing machines and they will then
And it
uh,
may not be the most
take
advanced
out the
parts,
chip.
by
Yeah,
the
take
way.
out the chips and stick them into a missile. But let me ask you on AI, uh, what you're thinking about, we see increasing inequality in the labor market. Got a lot of people living on wages that even the highest minimum wage in the country you can't really survive on with a decent living standard, let alone deal with a family. So, are you worried about AI taking away a good chunk of existing jobs with not enough coming in to, I mean, if you think about uh, the invention of the combustion engine, whatever, 1910 or whatever, whenever it came on, uh, we went from cab drivers driving horse and carriages, buggies, to cab drivers driving automobiles. And some people would say, well, people still had a job. This invention didn't really impact employment of cab drivers, but it did impact employment of horses. We had 50 we had 50 million horses at work back then. I think today we have 3 million horses. They're mostly just for fun, not for work. So do you think the humans are going to go the way of the horse?
No, I don't. But it reminds me of the Luddites. When automated weaving came, when you had weaving machines brought into factories, it basically changed the nature of the garment business, because now we were producing high quality goods that the average person and the lower middle class person could afford. Previously, clothes were an indicator of social class. So if you wore homespun, which looked like burlap bags, basically, you were seen as being uneducated and of a lower caste, and so on and so forth. So what happened with these weaving machines is we could produce cloth, we could produce clothing. Well, that produced a whole clothing industry, and it created a retail industry, and it democratized apparel. So I think you have to. I mean, is it going to be disruptive? Yes. Okay, but we deal with disruption all the time, right? I mean, think about the role of the secretary in the United States. Okay, when I went to Wall Street in 1976, I had a secretary. I still don't type very well. That's one of my handicaps, but I deal with it. I do a lot of typing, but I'm terrible at it, and I hate it. And I should probably just use technology to convert the spoken word to the type word, and then I can edit it. But those secretaries have jobs, and in many cases, they have better jobs and more satisfying jobs. And they've basically said, well, I'm a smart person. I worked here. Why can't I work doing what Fred's doing or what Fred's buddy does? And so I don't think AI is the threat that people think it is. I think it's going to change how we do things. It's going to be threatening to certain people.
On the other hand, we do have the evidence that the wage distribution of earnings has gotten more unequal.
There's no question about it. But again, let's step back a second. Okay, you mentioned it during this podcast, so I'm going to pile on it a second here. The reason that I am so pro-Jewish is because of the culture. The religion, the Christianity versus Judaism, not that different, in my opinion, my humble opinion. I'm probably wrong, I don't care. But the culture is incredibly powerful. And why is the culture of the Jews so powerful? Because it values education, and it values family formation and family values. Those things drive successful people in the real world, right? So if half the country, if half the children in this country are being brought up in a single parent family, and that the man or woman, typically a woman, is working, okay, and the kid is a latchkey kid, the likelihood of that kid getting into trouble, not doing his or her homework, Parent comes home, they're exhausted, they don't want to fight with the kids anymore. Did you do your homework? Not do your homework? The whole values are different, right? And so if you're brought up in certain cultures, uh, those values are so emphasized and they're dominant. I consider the greatest gift that I received in my life. I received no inheritance from my parents. By the time my mother died, it all went to my uh, my nieces and nephews and my own children, which was appropriate. But the greatest gift I got was having a first generation American father who went to Harvard College by trolley car when it was a finishing school. He was class of 40 with John F. Kennedy, and being brought up to value education above all else. Now, I was the youngest of three. I considered it my obligation to achieve to his standards. And he wanted me to go to a little day school in Boston I did not want to go to. It didn't have an ice hockey team. I was an elite ice hockey player. Believe me, I would have played college hockey easily. And, probably at Harvard, by the way. The former coach, Bill Cleary, has reminded me. And instead, I got sent to the Roxbury Latin School because it was the best education. Fred, you're going to go compete with the best. What do you mean by that, Dad? He said, well, 40% or 50% of those kids are Jewish. You compete with them, you compete with anybody. I mean that as the highest compliment. I mean, it was really a gift to me to learn what competition really is. Not that I wouldn't have learned it otherwise, but I think it's really important to recognize that a lot of the wealth gap is really a family culture problem, right?
Well,
I wish so much that Obama, during his 8 years in office, could have taken the bull by the horns and said, look, if you want to be a responsible father, you have to be at home. You have to take care of your kids. You have to support them. You have to put the right values in the right place. And I don't think he did that.
Or Biden or Trump or any of these people.
No, none of them really have. Because they're scared of the backlash. And right. I think, look, Obama knew once he was elected, he was good for 4 years. And I think he would have been glorified, quite honestly, and have had a great legacy if it spent all 8 years working on family values, family structure, and education.
Let me just add, though, that this gets to be kind of white Jews are white and they've succeeded, and other white folks with great parents and family structures have succeeded, and we have minorities in this country that haven't succeeded and are falling back relative to the successful whites, if you like, in this society. And then, so one thing is its culture, but another thing is that, in my view, is that the government actually has systematically locked a big fraction of the poor, who are disproportionately Black and Hispanic, into poverty by telling them, look, here are these welfare programs, and by the way, if you earn $1 too much, you're going to potentially lose your Medicaid, your Section 8 housing. For every dollar you earn too much, you might lose 20 cents in food stamps and the earned income tax credit and the child tax credit. All these things. And if you get married, guess what? A lot of these benefits are going to go away. So we have been doing studies. If people go to kotlikoff.net, studies of the disincentive to work and the disincentive to get married, and the actual marginal taxes facing people around the country. And the poor people are facing an astronomical kind of disincentive to work. I would say that probably a third are facing marginal taxes on working above 60%. Mm-hmm. So you talk about it, you go back to think about Reagan lowered the marginal tax rate, top rate, from 70 down to whatever, 28. We're talking about putting poor people on an ongoing basis in our country through the way we've structured our fiscal policy with so many different programs. There are about 1,000 fiscal programs because each state has its own Medicaid program, their own Section 8 housing program. They have their own criteria for joining these federal programs or how much the benefits would be. So I do think that Obama could have helped by, yes, trying to change the culture. So could Biden, so could Trump. But we also need to change the fiscal system so that we don't, that nobody should be in a marginal tax bracket above 30%. We need to have fundamental reform so that we're, and that's the
The
next
other
thing
thing we could do
we're work
is
on.
we
I'm
could
just going to
even
let the cat out the door before he,
I don't
because
know how you create a ceiling for this.
hang on 1 second.
Sure, Larry.
Okay. That's Riley, who people have seen on the podcast before. Generally, he's either wants to be outside or wants to be on my lap.
Yep.
But right now, he's got a. It's funny. He was very aggressive with other cats in the neighborhood for a couple of years. He'd never been outside. He'd been an apartment cat. We moved here to Providence. Uh, really aggressive with other cats, and then suddenly another cat comes along that he likes, and now they're best of buddies.
Right.
So to the point
But
where
your point, I want
yeah.
to comment on your point you're making here. You know, the problem, just on a very cynical basis, creating this dependency on government welfare, government benefits, is really great for getting reelected. Okay, because you know, these people may take away these benefits. What we really want to do is we want to create a situation where the more money you make up to a certain level, maybe we actually pay you a subsidy for making more money. So you can get out of public housing, right? People don't want to be in public housing, I don't think. And they want a better way of life for their kids. So if you basically give them an incentive, like, so if Fred makes $20 an hour at Chipotle, who, by the way, apparently now sells a steak bowl at $30 in California,
Oh my
reflecting
God.
higher inflation. $30? Anyway,
$30. Jesus.
it's hard to believe. But if you basically give people incentive to get out of the trap, which you could basically have a tax, it's not only a tax credit, you could actually have them, it's earned income. It's a government benefit by generating earnings.
I mean, we do have certain programs like the earned income tax credit that
Yeah.
subsidizes you up to a low level. And
Yep.
then as you earn more money, nothing happens. Then as you earn more money beyond that, it's 20 cents a dollar, you lose. So you're going to 20% marginal tax bracket. The folks that are in the largest tax bracket, the highest tax bracket, are Social Security recipients who are young, between 62 and the year they turn full retirement age. They're facing a 50% on the beyond $22,000 of earnings. Under the earnings test, every dollar they earn, they lose 50 cents of benefits. And that's actually not really the way Social Security works, but that's what Social Security tells them. The way it really works is that if you lose benefits, and I discussed this in Money Magic, if you lose benefits, you're going to get that benefit back in the form of a higher benefit level once you reach full retirement age. But between 62 and what's quickly going to be 67, people are being told, without any reference to this other provision called the adjustment reduction factor, that they're facing a 50% tax on top of the federal tax, on top of the California tax. Massachusetts like 5% tax, right? State income tax. So we're talking about people being told that they're in an 80%, 85% tax bracket in this age group. So you get canned unexpectedly at 62, and now you're being told you don't want to earn too much money because you're going to be just working for the government. It's
Right.
not actually true, but Social Security continues to tell people in their annual state letters about the COLA. You read that, here's about the COLA, and then the next thing they say, with no reference to the adjustment of the reduction factor, is guess what? 50 cents on the dollar. Don't work. And this is just nuts. So we have this policy to try and keep the older people, who are the most experienced, from going back to work after they probably faced age discrimination. That's why they've been out of work. Anyway, let's talk to us about politics in the country. What do you see happening with the election? Who's your money?
I spent 2 days last week in Washington with a group that you know well, because you've been a speaker to the group at the American Business Conference. It's a small group of mostly entrepreneurial CEOs who are running their own businesses or have built and run their own businesses. And we had two different political consultants come and join us, one for dinner and one at lunch on Wednesday. We started on Tuesday last week. And one of the points that was made that was quite interesting was how dependent we are and how much election outcomes are dependent on independence. So 30+% of the country considers themselves Republicans. They're going to vote Republican no matter what. There are 30% who consider themselves Democrats. They're going to vote Democrat no matter what. The 40% in the middle, let's call it 2020 because it's close enough to that. Three-quarters of the 20%, or close to three-quarters of the 20% who are Democrat-leaning independents, or an equal percentage, three-quarters of the 20% who are Republican-leaning independents, are going to vote that way ultimately in all likelihood. So it's the independents in the middle who matter. And what this election, what the concerns of if you look at concerns broadly based on polling, what's the number one concern in this country right now in the electorate? You want to guess? What?
My guess is, my guess is it's living standard.
Inflation, yes, exactly. Yeah. And number two is it's not the federal debt, believe me.
It's not federal. No, tell me.
Oh, of course not. Of course it's not.
Tell me.
It's immigration. It's immigration. It's the border. It's the border. And so if you take those two factors and you're running for president, you need to hammer on those factors.
So why doesn't Biden, if I'm Biden, why doesn't he, he's got some legislation he agreed on with the Senate and the Republicans and the Democrats. The House, under Trump's orders, said don't vote for it because I want to use this as a cudgel for my campaign, that Biden's done nothing. Why doesn't Biden independently push forward or just put in some executive orders at the border to say, we're going to shut this down until we have legislation?
I have no idea. I think he should. I think that would be, he may be too little too late, but he should definitely do that. There's no question about it. And the other thing is he should continue, as he will, to talk about inflation, recognizing, of course, that, and you know this better than I, the GDP numbers, jobs numbers, isn't it magical that every month or two we get a revision and it's always aversive? The revision is almost always negative to the messaging. But I think Biden has, I mean, look, I try to avoid taking political points of view here. I don't consider either candidate to be attractive or appealing. I actually think that in certain ways, and my right-leaning wife would probably be aghast. I think I personally might be better off with Biden being reelected. Okay. But Biden has another problem. And that is that when people enter the voting booth, they have to consider Kamala Harris. And Kamala Harris, by the way, got the worst approval rating, I think, of any vice president we've ever had. And you can can have your own opinions on her. Mine aren't very positive. And he will not get rid of her. At least nobody's predicting that he can. If he made a voluntary decision to get rid of her, unless she were jumped in and said, I really don't want to do this anymore, I don't want to be in the public light, and she could get pushed aside, that might be very helpful to him, to Biden. But I think that's a real problem. Now, when has a vice president ever been a factor in an election? Never. Nobody cares who the vice president is. Gee, who is his running mate? I don't know. I don't care. But I think in this particular case, Kamala Harris is another negative. And given the fact that this election is going to be tight, I think, in all likelihood, I think she's a real problem for Biden, a real problem.
And given that Trump is making noises about becoming a dictator on day one, and who knows how much.
Well,
I mean, well,
by the way, that's another example of his lack of judgment. Okay, one of the things, so here's the problem with Trump. we've got this inflation's an issue, the border's an issue. He's got two great issues to hammer on. Does he have the self-control and the presence to do that? I don't
No.
think so. He
So
doesn't.
you just don't know, and then whether he's going to take this as vice president, this governor of what is that?
No,
No, she's from
South
which
Dakota, not a chance. She's
South
done.
Dakota.
You,
She's the
you,
one who likes to shoot her animals.
you don't shoot an 18-month-old dog who needs training. You just don't do it. I mean, what she was like, regardless of how you might react emotionally to that, my reaction was very aversive. As you know, I have two large dogs that are very important to me. But it's one thing to have done it. It's another thing to be so unself-aware, to be so frankly self-involved as to not recognize that the reader of her autobiography could be aghast at this.
Yeah.
And it's likely to be aghast.
So tell me, before we only have a couple minutes, tell me what your thinking is about geopolitics. How do you see the war between Israel and Hamas evolving, or how do you see the Russian-Ukraine conflict evolving?
Well, boy, I'll tell you, I think the Russia-Ukraine conflict ultimately has to come to some kind of truce, some kind of settlement. Zelensky may not like it, but they've got to come to some resolution. Putin can't afford to not get something out of this exercise. He has to, in my opinion. In the case of Israel, Hamas,
I wouldn't say exercise, I would maybe say atrocity.
No, absolutely. No, absolutely. No. What went on there? What's going on in Ukraine is horrific. There's no question about it. I think that, I mean, first, somehow people are seeing Hamas and the Palestinian state as the same, which they're not. Okay, although the Palestinians have allowed Hamas to basically control them, which is their own problem. Hamas is not welcome in any other Middle Eastern country that I can tell. I mean, everybody basically wants to, Hezbollah, Hamas, they don't want them in their country because they know they're disruptive. So, I mean, I think ultimately Israel is going to succeed in blocking any further incursions, and I think they're going to increasingly have the support of the world. I mean, I hope so. I can't see Hamas. It's just too dangerous for Iran and others to be supporting Hamas in trying to destroy Israel. It can't happen. I mean, that would be a world war. That would be a world war. I mean, it would be way too close to what happened, in the 30s in Germany. And in Europe. It would be way too close to that. And I think people would recognize it for what it was. And the other thing is, so I recently, you talk about AI, I recently asked Perplexity, which is an AI platform. Perplexity, tell me, is it true that Christians and Jews alike are considered infidels by the Islamist religion? And the response was no, not really. The Islam preaches tolerance of other religions, et cetera, et cetera. All right. I mean, so it was a very politically correct answer, right? I.e., it was not a useful answer to me. But I do believe that anybody who looks at Hamas, Hezbollah, and any radical Islamist nation state, let's use Iran, does believe that their goal is to get rid of the Jews, who are the tip of the spear. I'm a Christian, right? I'm not really Jewish. But having said that, okay, I consider myself to be just as vulnerable. And if I have a child who's gay, oh my God, or transsexual, oh my God. I mean, the radical Islamism says defenestration for you, out the window. See you later. So I think there's a real naivete on the part of the U.S. population, at least, as to, I mean, most of them don't even know how Israel was created. They don't have any sense of it. They seem to somehow ignore the fact that the atrocities, and they were atrocities. I mean, there's a movie out, as you probably know, on the sexual violence that went on in Gaza, and in Israel, excuse me. on October 7th. I can't watch it. I mean, I was sent it to somebody said, "Oh, you got to watch this." I said, "I can't watch it. I'm just not going to watch it. It will give me nightmares." I mean, these people are basically. I mean, look, they behead a newscaster, they behead a journalist. This is not a society that any of us in the West want to be part of. I want to add one other thing you said earlier, by the way, about the so-called white types succeeding in our society. Let's also remember the Asians have come to this country, and by and large, because of their family values and their history and their culture, they've been really big overachievers, right? For the
Yes.
same reasons, because they value education. Ultimately, education remains. And I heard this from my dad growing up 50, 60 years ago. It's education, Fred. It's education. It's education. Well, he was right. It is education, and it's the family values that enable education. So
Yeah.
I think those are very important. As to the outlook for the economy and so on, I think the economic outlook is, I think, very soft. I don't really. I think the GDP numbers are, if anything, likely to be revised down. I think you just, if you ask anybody on the street, about the cost of living, they go to the grocery store, and I'm talking about people who are well off.
Mhm.
I want to buy a new car. How much is the car? I want to go to the grocery store. How much is the bill for this bag of groceries? You go to a restaurant, you get a mediocre meal for two people for $100, $80, $110 without alcohol. Oh my gosh. I mean, it's everywhere. And the consumer, by the way, what's kept this consumer so strong is that we had the tremendous stimulus, which is part of our national debt now, go to the consumers, they spend it. That kept the economy alive and strong in 21 and 22 and into 23. But right now, the personal savings rate, personal expenditures are exceeding personal savings. As you know, we're dipping into personal savings. That's not good for the economy long term. So, our view is that, the place to be, the best places for us to be as investors in the ideal world, and I'm not suggesting this is our entire portfolio, but we are very attracted to companies who are building shareholder value on the basis of stock repurchases. They keep lowering the denominator, the number of shares outstanding, by buying back 5, 6, 7% a year of their stock while still growing. This is certainly true in the oil and gas industry and the natural gas companies and so on, because we've given people no incentive to invest in building those additional natural resources. I think it's, ultimately we will mine uranium in this country. I think we will go to a nuclear power grid at some point, but it's going to be a long ways away. So we're going to continue to have, I think we're going to continue to have unnecessary inflation, because we can be the leader in oil and gas, and we can emphasize natural gas. We don't have to be burning coal, which we are, by the way. We are burning coal in this country. It's still 18% of our electrification comes from coal. It doesn't have to be that way.
We are the world's leading oil exporter, producer at this point.
Yes,
Uh,
yes. And,
so
and
listen, yeah,
and yet Biden wants to shut down the export of liquid natural gas to Europe. I mean, why would we do that? All
especially
that
in the
is help.
context of Russia, is we're dealing with Russia, and that's pretty crazy.
Yes.
And Ukraine, we want to basically uh, take away Russia's customers, not the other way around.
Yeah.
So, Frank, Fred, it's been a great pleasure as ever, and hope to see you up here in the near term.
You'll see
And
me. We'll get together in June. I'll be back in the Boston area in June.
that's great. Okay, thanks again for appearing on Economics Matters, the podcast. Fred,
Larry, it's a pleasure to be with you. You have such a polymath headset. It's extremely stimulating. So thank you for having me.
my pleasure. Take care.